Hello traders, Gary Wagner here, just after 11:30 in Honolulu, 5:30 in New York. It is Thursday, 29th day of August 2019, and this is the Daily Report for Gold and Silver. Did we just see China blink, or was it the true extension of an olive branch attempting to dampen escalation in the trade wars? It certainly had the net effect of dampening the fears of this trade war escalating, and the real question is, what was the underlying motivation? It could have been that their economy has been hurting so much that they need to do something, and this would be the simplest method to prop that economy back up because it's the single largest cause of their economic woes lately. Or it could be the fact that the scenario in Hong Kong is escalating, and it is widely believed by many analysts that their need to have sovereignty and maintain that is much more important to them than any economic dips that they might experience short term. Nonetheless, whether they blinked or extended an olive branch, the statements made today had a profound impact on U.S. equities in Asia as well as Europe, and it had a negative impact on gold and silver pricing. We did see gold trade sharply lower today, closing down about $12.40 at $1536.70. That's a net decline of about 0.8% on the day. However, it did trade to a low of $1528.60. That, in fact, did stop us out at 32. We pulled a small profit on the trade. We'll talk about that when we look at our charts. Platinum and palladium did close higher on the day, with platinum gaining about 1.2%, $11 at $919.90. Palladium gained fractionally, and that's after a sharp decline yesterday, $1,463, up $2.20. And silver, the same as gold, lost about 0.8%, 17.5 cents. The first chart that I do want to look at today is a daily chart. This is the continuous contract of gold. We can certainly see that there was a pretty strong sell-off today. That's this single candlestick right here. And in terms of causing major chart damage, but this day alone does not indicate that. We'll talk about the technicals, but we have spoken on so many occasions about recent activity and recent price changes in gold and silver, as well as U.S. equities, being firmly based upon the fundamental events behind it. It all stems from the trade war. Because of that, we've seen economic slowdowns globally, strong economic slowdowns in China. That has prompted a whole barrage or cascading effect. First of all, with the global central banks, they have been reducing their interest rates. They're also adding liquidity into the market. In fact, what they are doing is the beginning of a quantitative easing program, such as we saw in 2008. In this case, it is to alleviate the economic slowdown that was created by the trade war. The trade war, if settled, would certainly make the markets flip, in that we would see gold and silver lose much of their safe haven allure. That being said, we did pull a small profit today as our stop was hit. We made roughly $800 per contract, which is about an 8% return on the trade. I'm looking at it with a $10,000 margin requirement in gold. So I do recommend you having 15 to 20 behind each contract. Nonetheless, when we look at current market scenarios, if we're going to see a further drawdown, where do we want to look at for potential support? And to that end, we'll look at the extension first and then a retracement. The 1.382 extension, that comes in at 1518. That would be at the low end of the spectrum. Let me go ahead and add a Fibonacci retracement. And you can see we have just added the retracement. The easiest way to look at the difference between the retracement and the extension is I've color-coded the retracement in red. I haven't gone further than the 0.23% retracement because that comes in at 1,500. And to me, that would be actually a pretty dramatic retracement. The key is whether or not there will be a continuation of this olive branch. I believe it was a blink by the Chinese because they either want to move their economy forward and realize that the pain is too great not to do anything, or they're trying to remove the attention from what's going to happen in Hong Kong, because sovereignty is very, very important to the Chinese. That being said, we want to wait at least for a couple of days and see how this market reacts if we're going to get a further decline. And again, that's going to be fundamentally based if we see further decrease in escalation that isn't responded to by our administration. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.